just takes a minute for this thing to go. All right, looks like we're about to start live streaming. There goes our link. Let's just post it for everybody. And let's post this here. We can actually play this. There we go. Wow, look at that. Able to get it done. All right. Hey, JB. Hey, David, how are you? Campbell, good morning. Omar, how are you? Wayne. Double Wayne, good morning. Oh, two Wayne. Sorry. Wayne Bogart and Wayne Bryant. What are the odds? Carrie, Dave is in the house. We got a lot of folks here. I'm loving this. Joe is in here. Eagle Beagle, how are you? Ed, JB, Duzzy, Penny, Clay, Heather, Dr. Serena, good morning. David, Timothy. Welcome, welcome, welcome. Robert. We'll be starting in just a minute. Let me just share my screen here. And we'll be starting. Not an easy market, folks. Zen Master, Tony, Tom, George, Gaston. Oh, I'm glad you made money on Microsoft. Good, good, good. Richard's in the house. Thank you for that nice email, Richard. I do appreciate it. We got 75 people in the house. We'll be starting very shortly. And that's right. I'll have my 2 p.m. class. Cam is going to be my co-pilot. And remember, customer service live from 10 a.m. till 1 p.m. every single day in your members area. Good morning, Robert. All right. Also, while we're at it, let me just post this here. Where is my, oh, here it is. Here's my doc. Very challenging market. Good morning, Hari. Also, remember, I'm doing a webinar today at noon. It's going to be very, very cool. It's going to be cash flow webinar. Here is the link right here, and that's happening at noon. And my VIP room is happening at 11 today because it's Thursday. And don't forget, for those of you who are in my day trading class, who took the day trading class, we're doing the live trading today at 2 p.m. Now, I got a little bit bad news for you guys. There's always some bad news. Matt is not going to be in today and tomorrow. He is having his appendix removed. He called me last night. He is going to have his appendix removed this morning. He's getting his CAT scans right now. Obviously, you can't get your appendix removed and be here at the same time. But I will be here as usual. Hopefully, things will go a little smoother today. I'm going to head out to the office where I have my equipment. Otherwise, I won't be able to do the day trading room without my Thinkorswim and all that stuff. Not that we did so bad yesterday, but it's nice for me to have my equipment. Good morning, Nina. So I'll be doing that today. So I may be cutting things just a little bit shorter because I have more things to do because I am on my own today. Although we seem to have done pretty well yesterday. So let's talk a little bit about the market. I'm screen sharing right now. Yeah, thank God they caught it in time. Thank you. Thank you. I'll let him know. And you guys can always email him. His email is matt@rogerscott.com. Good morning, Kirk. So let some dirt on it and get back to the office. I will let him know. Thank you for all the wonderful wishes. And for all I know, he's here watching us right now from the hospital. I don't know if he is or not, but maybe he is. Yeah, he did caught it in time. Yeah, he'll be okay. He'll be all right. He's under control. They told him he's going under this morning, early this morning, so he will be good. And remember, again, we have 11 o'clock. We have the 11 o'clock VIP room. We have the 12 o'clock cash flow class, which is good right now because the market's cooling off. And posted for us that it cannot work today. Robert says boot camp is at 11 a.m. today, and it'll be posted on Telegram on YouTube channel, the YouTube channel we're at right now. But we'll make sure we'll repost everything for you. All right. I think you're talking about the full-time trading class. That'll be posted tonight. All right. And it should be important because more important than the trading that we'll do, The purpose of this class is not to show you, not to make you money, although if we make money, that's great, but it's to show you how I analyze the market intraday and how I make decisions in real time. And I think that's the real key here. All right. We've got more than enough we got over 200 people here. Let's begin. So yesterday we had the CPI report. How did we do yesterday? How did it go? We're going to talk all about it today, but you can see here the Dow is already cooling off, and the Nasdaq is up like yesterday. We're still seeing that nasty divergence. Now, what about the market, the broad market, the easy market? Well, let me show you what the impact this had yesterday. Yeah, he's probably talking about the 2 o'clock class. That'll be recorded and put in the members area for forever. So, and I'll be able to showcase that new VWAP indicator and show you guys how we use it and so forth. It'll be fun. I'm looking forward to it. I'm really looking forward to it. It's going to be exciting. All right. So this is the equal weighted SPY. Look what happened yesterday. I want to show you guys this. Let me go up over 5 days. We huffed, we puffed, and we closed at the bottom. Thank you. I appreciate it. Moondog is in the house. I like that. So you see the impact that we had on the report had yesterday? It wasn't that great of a report. And basically he kept saying the same thing over and over and over again. We don't know things are moving in the right direction. We don't know things will get better. But look at the reaction. We gapped up and we went straight down. Look at the Dow Jones. This is the Dow Jones. I just want to show you this. We gapped up and look at what happened. We completely erased all of it yesterday. Now, what about the regular SPY? What about the regular SPY? It didn't do that. So we could see that 80 or 90% of the weakness is coming from non-tech stocks, because look how tech stocks did. And remember, S&P has about 30-40% tech stocks in it. Look at that, straight up. So you could see that if you take away the large cap, the real large cap stocks, and I mean the NVDA, the Apple, the Microsoft, which is why we went long Microsoft yesterday. Look what happened. We went straight down. Don't let this fool you. Don't let this fool you. Don't let this rally fool you. So when you look at the SPY, and I apologize for what you're about to see right now, you're going to see all these lines here. See that? Well, I see how it's making an all-time high and it's looking good. Well, when you strip away all the market cap, this is really what it looks like. If the air comes out of AI, we are toast. So this is really what the market looks like. So the market couldn't take out the overall market, not 5 stocks. The overall market couldn't take out the highs, and now we're below the 8-day EMA on the downside before a major report. What about the bond market? How did the bond market react to everything? Let's take a look. The bond market, remember what I said yesterday? If we break, and I said this yesterday during the announcement, I said if we break this level right here and close above here, that means we're getting into a deflationary period. What did I say yesterday? I said there's too much stuff here. There's too much stuff here to cause us to break out right now, and we're approaching the year VWAP, the year-to-date VWAP, okay? And there's a lot of resistance here at this area. So what did the bond market do yesterday? It huffed, it puffed, and then it closed lower. Look, this was the open. All day long, we went down. All day long, we went down. Depends on the platform I'm looking at, Penny. If I'm looking at TC2000, I'll look at VXX. If I'm looking at bar chart, I'm going to look at VIX. So nothing good happened yesterday. What? But Roger, the S&P and the Nasdaq. Look at the Nasdaq, Roger. It made an all-time high. I mean, look at this thing. It's rocking and rolling. Look at this thing. It's huffing. It's puffing. Look at this. It's going crazy. Yeah. Well, let me show you something else. Nasdaq Composite, 47 stocks trading above the 200-day moving average. The Nasdaq 100 with all those big stocks, 56%. Russell's, everything's lower than 50. How about S&P 500? 48%. This what we're looking at is pointing to this. Whoops, excuse me. It's pointing to this, not the S&P 500, because the S&P 500 is not equal weighted. So what you're really seeing in the market yesterday, aside from the AI, is a big whop and a big undo. It completely undid everything. Right? And again, to the bond market, what did I say the bond market was going to do? It's going to peak out right at the year VWAP, and it did just that. Now, it's going to be very hard for the bond market to go up because we already know that he said one to two announcements this year. Guess what? That doesn't fall in line with this at all, which means probably a good time after the report today to start looking at some credit spreads here, which I may decide to do in our 2:00 class. We will see. We'll see how that goes, or maybe I'll do it somewhere else, or maybe I'll give it to you guys as a bonus. I don't know. But I'm not seeing anything that would lift the bond market at this point, unless the PPI was magical. And and I don't think we're going to have a magical PPI report. I just don't think that's going to happen. And by the way, that's coming out. We have jobless claims. Jobless claims are fine. Nothing to worry about there. And we have the PPI. Now, what are we expecting on the PPI? We're looking at We're looking at this number right here. We're looking at this number right here. Notice the PPI outside of core, it's expected to be stickier. I'm going to tell you, folks, this AI thing is really distorting the market a lot right now, a little too much, because it's getting to a point where it's getting ridiculous. Because you're not going to get a lot of flight from. You're not going to get a lot of flight when the Dow looks like this. And Dow's already down over 100 points. And look, the Dow looks exactly like RSP does. Exactly. I mean, look, almost identical. Except this one doesn't have those lines in it. See that? That's that's the equal weighted, and here's the Dow. Look at it. Making lower lows, went up, now below the. So the market is a complete illusion right now, and it's being driven by XLK, XLC, and SMH. Communication, tech, and chips. Those are the three sectors that are driving the market. So what about the rest of the market? So my point is, it's really hard to trade the market right now. Why? Joey, it's on your end. Why? Why is it difficult to trade the market? Because you have divergence between the S&P and the Dow. Because you have low volume right now. Because the only stocks in the indices that are moving are like the largest tech stocks only. So we have a huge divergence, fragmentation in the market. Yeah, right, infinitely, not intelligent. And I don't think it's that intelligent. So overall, and by the way, I have my TC 2000 up today. So when the PPI comes out, we'll be able to see everything in live. We won't have to guess. I haven't closed it from yesterday. I was working from home yesterday. Most of you know that. Good morning, Ivano. Welcome. Okay, so markets are giving us trouble right now. This is not a time to be a hero. If you see me slowing things down a lot, actually, I haven't been slowing anything in the pit. But if you see me slowing things down overall, it's because I'm trying to do you guys a favor. I'm not trying to screw you. And again, keep your eye on the bond market. If the bond market takes out yesterday's low, which would coincide with the 100-day moving average right here around 92, this thing is going to fall down. It may happen as early as after the announcement that's happening in 15 minutes. All right. Robert, good morning. Dean, good morning. Anyhow, my point being is we have to watch the bond market very carefully today, and we have to watch the broad market, the bond market and the broad market and SMH. Stop focusing on what the big S&P is doing. And as far as momentum levels, I think I already mentioned that. Right now, we have in the overall market of all stocks above $2, excuse me, $5, $2. Yeah, right here. And have been trading for 6 months. This is everything, and this is the entire enchilada. 46% are trading above. 46% are trading above the 50-day moving average. We went from 40 to 46%. Last week we had 48. Last month we had 58. So we have I want to show you guys something scary. You guys want to see something really scary? Dave, are you in the trading pit, Dave? Dave Formas, are you in the trading pit? I want to show you guys something. I just want to know if you're in the pit, Dave. Yeah, I know you're talking about Tesla pre-market. I want to show you something. Let me show you guys something. Look at this. This is what I wrote yesterday at 2:43. Tomorrow, Tesla is voting on Musk. I think there may be some volatility ahead of it. I'm considering a strangle or a similar spread to what we did on Apple. And then I wrote, the spread is $3. It's too expensive. If it was $2, I would have done it. I shouldn't have been cheap because we would have made about 200% on that trade. But that's the reason why I asked, because you brought it up, Dave. I'm talking to Dave Formas specifically. Yeah, that would have made us about 250%, but I was too cheap. But anyway, the point is we have less than 50% of stocks making swing highs. And if you look at the overall market, you will see on the Russell 2000, look, 46%, 47%, 46%. Oh, you took my Tesla strangle, Richard. Let us know how you did, okay? When you're done with it. You did see it in the pit. Okay, well, let me know how you guys did. Anyways, yeah, I just didn't want to do it. It was too expensive. So everything, all the Russells, even the Russell 3000. But let me show you something scary. Let me show you something scary, really scary, okay? Look, I want to show you guys this. So how you shouldn't be always looking at what the market is doing. Look, this is going to be scary. Remember that example that I give you with a car's riding around the track? And the car is riding at the car is pushing the driver is pushing the gas pedal, and he's pushing the gas pedal, and the car's going 60 miles per hour. As you're watching the car from 500 feet away, so you can't hear anything. All you're seeing is the car moving, and you're measuring the speed. You're measuring the speed. Meanwhile, his engine is breaking down. So his 8-cylinder car is now driving on 6 cylinders, and now he has to push the gas pedal more. Now it's driving on 4 cylinders. He has to push the gas pedal more. You are the observer. You're not seeing his car break down. You're not hearing him, the engine work harder. All you're seeing is the car moving 60 miles per hour. Now watch. Now, just remember this example I gave you. Watch this. And this is not a theory. This is a mathematical fact. So the S&P right now is at 4,541. Today is the 13th. 13th of last month. I want you guys to write this number down. We were at 522, right? We're now at 542. 522, 542, right? I have no theories here. This is just numbers of where we were a month ago versus now, right? Now watch this. Now this is scary. Hold on to your pants. Last month, 58% of stocks were trading above the 50-day moving average. Right now, 46% of stocks are trading above the 50-day moving average. Meanwhile, the S&P went from here to here. Do I need to, this is one of those show and tell moments. Do I need to say anything else, or can we move on? 522, 542. 46%, 58%. I'm just pointing it out to you. I don't have any, this is math. Congrats, Eric. Happy birthday to you. Thank you. Happy birthday. I hope you have a wonderful day. So here's my question to you. If you're watching this, you're seeing less stocks making 50-day highs. Meanwhile, the stock market went from 522 to 542. Okay? Try to find Kramer or CNBC teaching you that one. So you see how the engine is slowing down? And I'm not theorizing this. I'm literally showing you an example of it. Okay? Carlos, it's more like 5% of stocks influencing 95% of the market at this point, which is really, really scary. Yeah, yeah, I did, does he? But it's one thing to talk about it, and it's another thing to actually show you the numbers. I don't own bar chart, and there's no conspiracy here. I'm just pointing out things that you may be missing in your analysis. When you say a few stocks carry, we're literally talking about a few stocks, which is really scary. Okay. So I want to know, how do we increase the speed? How do we move forward on the S&P when there's 15% less stocks driving the market? Good morning, Rebecca. So I explained that one to me. So my point is, I think the bond market is going to cool off. I don't think it's going to go up too much. I think it's going to cool off because we kind of know where we stand right now. And I think the SPY is, because once these, as soon as these AI stocks need go into a rotation, and every sector goes into a rotation period, what the hell is going to happen to the market? And what is going to drive this market higher? So if you're asking, Roger, how come you're in these stocks and they're just not going anywhere? They're not going anywhere because the market's not going anywhere. This is what we're dealing with. This is what we've been trading. You think you're trading the stock market that's making you highs, but what you're really doing is trading this. Yes, Paro, you have to look under the hood and you have to know where to look. Right. So this is what we've been trading for the last month. Nothing. Look, nothing. We haven't gone anywhere. All right. All right. Sorry I took so long, but I thought this was really important to explain to you guys, because if you don't understand this, you're going to be trying to buy every breakout. And when most breakouts are not working right now because the market is not really breaking out. It had a false breakout yesterday. We are completely below yesterday's price range pre-open right now. If you guys can believe that. Completely below pre-open yesterday. All right. Sorry about that. All right. Let's talk about, gold real quick. Gold is still having a head and shoulders. If we are going to go into a deflationary cycle, then this is a top. This is a top. If the market breaks down hard right now and starts giving us trouble, this will rally. As we sit here right now, I'm going to go with the technicals and say that we are breaking down because this is a neckline. And if we break this neckline, we're going to go to the 100-day moving average. Crude oil. Remember what I said yesterday about crude oil? I said there's way too much stuff here to get through. I said you have the 200-day moving average, the year-to-date VWAP, my handy-dandy trend line, and the 100-day moving average. And then above it, to make it even a little more pleasant, you have the 50-day moving average and the quarter-to-date VWAP. So you have a ton of stuff, a ton of stuff that crude oil has to get through to go higher. Do I think that's going to happen right now? No, I don't. And I'm not seeing any catalyst for it either. So from where I'm sitting, we're going to either come down all the way down, and this is a peak like we're seeing in the bond market right now, or we're just going to consolidate around here. I'm not seeing any major movement from this market. By the way, before we move on, if you guys are in the weekly cash flow, which we'll be doing today, I just want to show you this is the stock. We did the stock we did the stock 2 days ago. The stock went against us. I just want to show you because it shows you the value of this. We bounced off the year-to-date VWAP. We closed at the bottom near the 100-day. And this morning, we're not catching any bid. Most importantly, if you look at the volume yesterday, you will see that it was higher than the day before, but it was all negative. It wasn't positive. Okay. All-Star, I don't understand what you're saying in the language that you're speaking. Maybe somebody can translate to us in English. I just don't know what you're saying. I don't know what I don't know if that's Farsi or what it is. But anyway, so the way I'm seeing this stock is I think it's down this morning already. I think it's going to break down and come off. Maybe consolidate a little bit here and come off. But I'm not seeing this yesterday really gave us a big picture that this stock is not really ready to move. And financials are not participating, and that's it. So just wanted to update you because a lot of people asked me about this stock. It got some fundamental news from Apple. It rallied here and here. And now it looks like it's coming right back down. Anyway, just wanted to update you before we move on. So let's talk about the big picture. Market participants weighted slowing U.S. inflation against the Federal Reserve more hawkish tone in interest rates, with attention now shifting to the PPI and Adobe. You can, Tony, but I don't use head and shoulders on other time frames. I hardly use it on daily time frames. Like if it's very obvious, I'll do it. Otherwise, I'm more of a triangle guy. I'm more of the ascending, descending triangle kind of guy. Widely expected, Federal Reserve did absolutely nothing and adjusted the language in its post-meeting statement, acknowledging modest further progress towards the committee's 2% inflation in recent months, whereas previously statement had indicated lack of further progress. At the same time, the updated summary of economic projections stood the median forecast for a Fed fund rate at the end of this year at 5.1%, with only one 25 basis point rate cut at 2024, contrasting the 3 cuts in March. And by the way, remember what I told you guys yesterday, what he's going to say? He's going to completely say, I'm just going to continue saying exactly what I said last time. And when they tried to sucker him into, well, what if this? What if this? He was like, we make adjustments on the fly. We can make revisions anytime, and we don't even talk before the meetings. So he just cut them off right there. So again, we're looking for PCE this morning. We don't know how it's going to come out, but if it comes out like yesterday and confirms yesterday, I'm not expecting anything major from the market because we already know what the Fed is going to do because we heard him yesterday. And by the way, yesterday was the most uneventful FOMC rally I've ever seen in my life, okay, in my life. Oracle climbed 13%, top gainer on the S&P, gave us a lot of upside. Again, more AI talk. All you have to do is mention AI, and you're making money now. Apple advanced more than 2%, top percent gainer in the Dow. You guys are welcome. I know a lot of you made money on that. I'm glad you did. Labor Department. Basis headline, inflation eased. The number was better. It was better yesterday on all accounts. Was it a great number? No, but look. 3.3 versus 3.4, 3.4 versus 3.5. He can say with a straight face, we're making progress. And that's all he has to do. And by the way, when they said, are you making good enough progress to adjust your timeline? He said, no. And I knew he was going to do that. And I told you that. He's not going to do that because he could do that at any time. He doesn't need to do that now. All right. You're welcome, Clay. Meanwhile, the market is still anticipating an 8%. Now, here's my question. You guys all heard the same thing that I heard yesterday. How could we still be at 8%? How could we be at 8%? I'll show you how. We're at 8% because the bond market didn't do anything yesterday. The bond market has to come off because the real number is 0 in July. And we already know that because he said 1. Good. I'm glad to hear that, Richard. So my point is, how can the bond market be anticipating 88%? That means this has to be at 0, and it only has to till July 31st to get to 0. That means bonds have to go down. July 56%, I would say September 56%. I would say September's more like 20%, 15 to 20%, which means bonds have to go down. By the way, PPI, anybody know the number? Let's see how the market's looking. Well, TLT is breaking up, so the number must be positive. It must be better than expected. And the SPY is breaking out, which means the number must be better than expected. Let's see how the number looks. Nothing yet. Let me know. Let me know. Yeah, TLT's up. That's okay. Went up yesterday too. And what happened? Came back down. Yeah, PPI's down. That's good. Good. We'll have a little bit of a rally this morning. As I showed you, that's the SPY right now. This is real time. And this is the bonds in real time. QQQ up only 50 point. QQQ is not really doing anything crazy. Let's look at financials. Nope. SMH, XLK is moving. XLY is moving. XLF, no, XLC. Not really. Interesting. Will be interesting to see how it all shakes out. But what's good for the market? Rate cuts, Dean. Rate cuts. Rate cuts are really good for the market. Okay. So anyway, let's go back to our analysis. So we already know the numbers. We have Adobe coming out today. Maybe there's a time spread on that. We will see. Core PPI is the watch number today, and jobless claims. Let's see what the jobless claims are. 227. Oh, no, 247. They're actually getting worse. So you see the jobless claims are getting a little worse. This is gonna put a little bit of a hamper. A little bit of a hamper because the average is getting worse. Is this a really bad number? No, it's been really good for years now. But this is worse. People can start attacking this. They can start attacking this number. Oh, Microsoft is up $1 from yesterday's close, by the way, for all of you who took that position I gave you yesterday. So far, the number's good. Let's see really quickly, and then we'll move on. See if the PPI is here. Ooh, look at that, negative 0.2. We'll see once it fills up. But so 3.2, okay, 3.2. 3.2? What? Can't be 3.2. No, Carlos, it can't be 3.2. That's totally out of whack. 3.2. Anyway, the market is moving. The number has to be positive because the bond market is moving higher right now. It's almost at yesterday's high. So I don't see that number. I'm not seeing that number too bad. I mean, all the tech stocks are moving up right now. All right, so let's continue. We'll know what these numbers are. Don't worry, we'll know. But so far, they're good for the market, at least for right now. All right, here they are. Oh, this number, 3.2. Yeah, a little sticky. Better. No, these numbers are better. They're better. This number's worse, but X food and energy, it's better, and food and energy. You're talking about this, the latest one here. I got you. Yeah, 2.2, 2.2 and 2.3. These are the numbers right here. Right here and right here. They don't even have the expectation for this one. So they were better than expected. No, bonds going up is good. My problem is I don't think it's meaningful. That's the problem. I think it's going to come off like it did yesterday. Look at yesterday. And then again right now. This is yesterday. This is today. Again, if the number's good, it's good. But again, I'm just telling you, not a lot of stocks are being driven by the market. All right, let's continue. So jobless claims are not that great. Europe, they're down. They're waiting to see what happens with us. They're expecting the Fed projection for only one rate cut this year, tempered. You see, when the bond market goes up right now, this will increase that 8% odds for the kids that the rates are going down in July. And we know they're not. So we know that anything that comes up right now has to come down. Okay? So just want to explain to you how it works. U.S. inflation, auto stocks led the decline on Thursday. National Statistics Institute said that Thursday that Spain's annual inflation accelerated in May, confirming preliminary readings. China closed lower. Retail and property stocks underperformed. Chinese electric vehicle maker stocks rose, with analysts noting that the European Union's preliminary announcement of tariff increase aligned with expectations. Japan reversed earlier gains, closed lower, cautious mood for Bank of Japan. They have a policy decision tomorrow. or later tonight. Loss in auto and insurance stocks led the overall market lower. Cabinet reported Thursday that the business survey for large manufacturing in Japan fell less than expected. Meanwhile, government bond yield declined on Thursday, tracking a drop in U.S. yield. Yeah. So Tesla is climbing. I remember yesterday I sent you guys a little note saying that there's going to be movement this morning. But again, those options were just too expensive. By the way, the kid's getting his hope again that he's getting that bike in July. That number's going to move to 15, 16% in July now. Is it going to happen? No. But now I'm going to gloat a little bit. Do you guys remember the last time we had our market outlook report? That's funny, Joy. So do you guys remember the last time I did the Trading Pit webinar? I gave you the second part of the year preview ahead of time. And I gave you my predictions. Do you guys remember I gave you my predictions? Do you remember what I said about Chipotle and AVGO? Does anybody remember? I want to see if anybody remembers what I said about Chipotle and AVGO. I gave you a very specific prediction about a month and a half ago about Broadcom and AVGO. The prediction was those stocks are going to go up because they're both going to have a stock split. That was about 6 weeks ago. Right? $50-to-1 stock split. Chipotle approved 6 days ago stock split. And when did I tell you this information? When did I tell you this information? Last week or like 6 weeks ago? And Deck, I did. Sandeep, you remember. So I gave you seven during that class, I gave you 7 projections. As of yesterday, every one of those projections is accurate. And I'll be reminding you of that later this week. Yeah, AVGO. Greg, if you don't remember, I'll bring you back the slide. It was about a month ago. I said AVGO and I said Chipotle and Deck. Thank you for reminding me. The 3 stocks. It was in March. Yes, it was in March. All right. Don't say Uncle Roger doesn't take care of you. So, but I didn't say it last week. I said it in March. Okay. So that's the deal for today. Now let's talk about levels. Dow Jones. Let's look at levels. I did. AVGO, Chipotle. I remember you guys were telling me how to pronounce Chipotle. You guys don't remember this? I'll show you the slide. Literally, I'll show you the slide. It's recorded. All right. Yeah, I did. I mentioned NVDA. I mentioned Deck. I mentioned Chipotle, and I mentioned Broadcom. And guess what? Let's think about that one for a minute. All right. The Dow Jones, this is real time. So what impact did the report this morning have on the Dow? Right here. Very, very little. Very, very little. And now we're back in that level. Remember I said we have to pay attention to 39,000 and 38,500? It means usually the stock will go up. Deck is going to split. So keep an eye on this today. If we break 38,500, we're going to go down, and I think the Dow will pull the market with us, okay? I did. I'm not going to – look, guys, I make too many accurate projections to lie to you. It would take me too long to talk about all of them. I just remember because someone told me yesterday that Chipotle is splitting. I didn't know. And I was like, wait a minute. We said Deck, AVGO, NVDA, and Chipotle. That was my projections. It's in the recording. It's in the recording as that we reviewed it. Yeah. I can't pronounce that Chipotle to save my life. David Decker was there too, and so was AVGO. I even made a comment how it'll be easier for us to trade AVGO and how Jack Carter, it's his favorite stock. He won't be able to write expensive options on it. I remember making that comment. All right, so the Dow Jones, 38,500, 39,000. QQQ. We can't draw any lines. We're way overextended, even right now. SPY, we can't draw any lines. We're overextended. Yeah, my 4 stocks for remainder of the year. It's exactly what I said. I tried it, Richard. I tried too many times. Chipotle. I can't do it. Anyway, they're all making swing highs. The Dow is our only form. Now, by the way, since the announcement came out, look at TLT. Big up and then down. Look at what happened yesterday. Up, down, back up, and I think it'll erase it, and then we need to start gapping down. On the bond market, what you want to look at, you want to put an alert here. Let me put an alert. 92.50. 3. Right here. 92.53. That's right, Cam. It would. I can't. I'm not going to do it. I've made mistakes too many times. Chipotle. Chipotle. I can't do it. Anyway, you guys cracked me up. All right. So keep an eye on the bond market today, guys. Keep your eye on the bond market. It'll be a great time to do the day trading session today. All right. Let's talk about stocks. You guys have the key levels. Keep your eye on the Dow. Keep your eye on the Dow on the 38,500 level. Keep your eye on the VIX, which is right here. Especially intraday. It's again at its low right now. Keep an eye on it. If it starts going up and if the bond market starts coming down, it's not going to be pretty. Chipotle. That's the best I could do. Chipotle. All right, let's look for this to go. Maybe I should get a t-shirt that says, I don't know how to say Chipotle the right way. I'm an idiot. Anyhow, so keep your eye on bonds today, on the TLT, and whether it starts breaking down on an intraday 5-minute basis, and keep your eye on volatility. Be very, very careful today because of the momentum levels. Be very, very, very careful today because of the momentum levels. Let me see how Netflix is doing. Yeah. Oh, down a little bit overnight. Yeah, still in its range. Okay. All right. So let's talk about stocks. I got a lot of stocks for you guys for today. Look at this. My notebook is almost done. I've got like 1 page left for my VIP room today, and I got to move to a new notebook. Is this helping you guys? Or is this helping you connect the dots? That's my main concern. That's what I want to know. Thank you, Robert. Francis says, what do you mean by momentum levels? Momentum levels means if they reach those levels, there may be a big, either a pullback or I mean that those are reaction levels. There will be a reaction. Chipotle. All right, good. So let's start with the short side, okay? Energy stocks. Good. Thank you, Eagle Beagle. I appreciate it. Okay, so we can't do anything on Marathon because we have the 200-day. We have to wait to break to the 200-day. So we want to break lower. Nothing yet on this stock. DOX. Thank you, Karen. I appreciate it. Oh, my dogs are going crazy right now. I'm sorry if you guys are hearing that. I apologize. Oh God. It's like a convention here. All right. Right here, docs. I like docs. I like this stock a lot, actually. I keep forgetting about it, but I like it. I may short this stock. And look, it's past the 200-day moving average. Thank you, guys. Thank you for the amazing feedback. I really do get the best feedback. I do. I have a very good, loyal following. You can't hear a thing? Amazing. 402 watching Dr. Serena. Yay, we got over 400 again. And remember, it's summer and it's holiday right now. A lot of people are out. If this breaks down, this will be a nice short. I like how it's bouncing off the 200-day and keeps breaking down. Dollar Tree or Dollar General, just one or the other. Yes, Raj, they're discussing the rate cuts. And Dollar General are in the same boat. You don't need to do both. You could just do one. Yeah, they're discussing the Yelta conference. CNC, another doozy right here. Be careful with these stocks. They make better swing trades than day trades because we just don't have a lot of momentum right now for swing trades to the downside. But I like this one. I like it a lot. CNC, EL. We've been talking about this stock for quite a while. Still breaking down. ZBH. Yeah, they're having a Yelta conference. All right. I like Zimmer Biomed. I can't even tell you how many times we've talked about this stock. That's a nice stock right there. Broke down, tested the 200-day moving average, breaking down again. Yeah, I have one page left on my notebook, Cam. Literally, it's got one page for today's VIP room, and I'm done. I should make a photocopy of this notebook and send it to everybody. Rogers Archives. This is a beauty. And by the way, I told you about the stock right here, right here, right here, right here, and right here. And I dare anybody to tell me that I didn't. Molina Healthcare, another down stock. Like how it's hugging the 8-day EMA. It's breaking down. I like this. I'll take a look at CCL in a minute. Let me just go through my list. Important note. If you might have noticed, this stock, Tyson Foods, you might have noticed KHC, you might have noticed Pepsi. They're all on my list. The reason I wanted to give you KHC and Tyson is because they're the biggest ones. But overall, if you look at consumer staples, yeah, Gus, we're back at the low wick. Yeah, we're coming. We're about halfway. We undid about half of that rise so far in TLT. Look at XLP. XLP is starting to come down. So I'm looking to short consumer staples right now. Don't pick more than one. They're highly contagious. They really are highly contagious. Okay. Now let's talk about the long side, shall we? How many times did I talk about this stock in the last 3 months? Google's looking good again. Google's looking good, and it's at the 8-day EMA, by the way. Qualcomm, this is the only chip stock that I'm still attracted to right now at this point. Maybe Micron, but they're getting a little overextended. Look how far it is from the 8-day EMA. You don't want to buy when we're too far away from 8-day. You want to buy here, sell at the heights, not the lows. Cars. This is a new one on my list, and I'm not being sarcastic. I mean that. This is a new one on my list. I like how it's building, and now how it's starting to break out. Be careful. Be careful with major breakouts right now because momentum levels are in the toilet. I mentioned this stock a few times, literally just a few times casually, but it's starting to make a move. But again, be careful. It's far from the 8-day. I prefer you buy stocks near the 8-day EMA today. This summer, we're going to be launching the A line or the accumulation line program, which focuses on buying stocks that are just touching the 8-day EMA. And I'm going to make an indicator for you that does that too, like I did for the VWAP class. APH. I like this. I like how it's doing this right here. I like that. C Limited. You guys remember an oldie but goodie? I found the stock about 6 years ago, and it from I think Stanley Druckenmiller was buying it, and I liked it, and boy oh boy, it's had a down period, but it's moving up again. I talked about GPN, Cam. I did. We talked about GPN. That was on our short side. Lilly is one of the few healthcare stocks that I'm really liking right now. And don't be afraid that it's that expensive. You can put a debit spread together for like $5 to take advantage of these expensive stocks. And I was doing that yesterday with I think Amazon a few days ago, or Apple in the pit. You can do that. Thanks, Carrie. I appreciate that. I did not know that. APD. Be careful here. It's a little far away from the 8-day EMA. I prefer to buy it around here, especially right now. And last is RCC, or RCL, excuse me. Sorry, let me. Now, somebody asked me about CCL. I'll take a look at it. So this stock looks great right now. It may be a good top alpha stock because of how it's grinding. I like these stocks, and I like buying these stocks around the summertime. Cam, I shall see you at 10 for a VWAP. Oh, okay. And somebody said CCL. Let's take a look. They should be following each other. They usually mimic each other. No, they're not. I definitely like RCL. And this is why, see, this is a great reason why I do this with you guys, because you guys sometimes ask me questions which will bring me to something, and it'll show me that I'm being totally inconsistent, because I thought CCL and RCL were doing exactly the same thing. SLB, last one. I'll take a look at SLB. Yeah, it looks like it's a great breakdown right now. Looks like it wants to break down right now. Swiss sticks, I like where you're going with this. I'm going to add this to my short list for today. And if I take the trade, I'm going to give you full credit, Swiss. I like what I'm seeing here to the downside, actually. I do. Very nice. Very, very nice. You have a trend, a nice solid trend. You have a pullback to the 8-day EMA, goes above the 8-day EMA for a few days, and now below it. Brilliant. Deck is going to, I think they will. Know everything I need to be comfortable to do strangles and spreads without just parroting you. No problem, Eagle Beagle. Legal Beagle. All right. Sorry, Adam. I'm just having fun with you. All right, guys. We have 412 people in the room. Before I depart to parts unknown, today at noon, I have a live class, okay? Right after VIP room, it's a live class. I'm going to post both links for you, okay? The VIP room today is at 11 a.m. We've nailed 32 out of 37 trades, okay? 32 out of 37 trades. You'll be able to get in on it. Let me just post the link for you here. And we'll get moving here. Here's the link for you. 32 out of 37 trades. These are income trades. If the market keeps doing nothing for the foreseeable future, income is going to be a very, very important tool for you guys to start using. I talked about Paro. I talked about Shopify, and I think Shopify is getting ready to pull a gap to green. It's about to get in the gap. It was one of my stocks that I gave you guys in the gap to green class right here. See that? The only problem is it's right at the 50-day moving average, and we have a little bit of resistance here. But if it goes through, you got some good stuff here. All right. Beagle. Anyway, guys, I had a fantastic session. Remember, we're going live at 11 and at 12. We get in on Mondays. We typically get out on Fridays. Sometimes we get in at different days of the week. And I changed the program around, and I'm going to explain to you how I changed it. Whether you trade my credit spreads or you trade your own, I highly recommend you come in today because I'm going to give you and show you a different way to trade credit spreads. I've switched the program over, and it allows us to have a lot less risk and have our cake and eat it too. And I'll show you how I'm doing it at noon today. Don't miss out. Join me, and I will see you guys later. If you have any questions, send me an email. Here's my email address. Please be patient with me. My assistant is not here today. I am a one-man show, aside from the 100 people we have at the pub helping me out. But just be patient with me today, and I will see you at 11, and I will see you at noon, and then I'll see you at 2 o'clock again today. It's going to be a very busy day. Everything will be recorded and posted. Bye, guys.